Hello. Today we're analyzing Cisco stock. Cisco stock is currently trading at $70.69 level. Analyzing the technical indicators for Cisco Systems, CSCO, we start with the Relative Strength Index, RSI, which currently sits at 59.2. This places the RSI well within the neutral zone between 30 and 70, indicating that the stock is not in an overbought or oversold condition. With the RSI approaching the upper threshold, it suggests that there could be potential upward momentum, but not in an extreme sense. An RSI level above 70 would typically indicate overbought conditions, where prices may be due for a correction, while a level below 30 would highlight oversold conditions, indicating a possible rebound. Therefore, the current RSI suggests a balanced situation, which could mean that traders might look for signals before committing to buying or selling actions. Moving on to the analysis of moving averages, we observe the 5-day moving average at 70.83, the 10-day at 71.16, and the 20-day at 70.75. The current price of 70.69 is positioned just below these averages. This positioning indicates a bearish trend in the short term, as the price is consistently below the shorter-term moving averages. The fact that the price remains under these moving averages could signal a lack of momentum for upward price movements. Crossover signals, which occur when shorter-term moving averages cross above longer-term averages, could potentially indicate a shift in momentum. However, in this case, the lack of such a crossover suggests that the stock is not currently in a strong bullish phase. Transitioning to the MACD, we find the MACD line at 0.490 and the signal line at 0.643. The MACD line being below the signal line indicates a bearish sentiment in the market. This relationship between the MACD and the signal line is critical, as it provides insight into the momentum of the stock. When the MACD line crosses above the signal line, it typically indicates a bullish trend, while the opposite suggests bearish momentum. The current configuration of the MACD does not support a bullish outlook, reinforcing the idea that the stock is struggling to gain upward traction at this time. Next, we turn our attention to the Bollinger Bands, which are currently configured with an upper band at 72.46, a middle band, 20-day SMA, at 70.75, and a lower band at $69.05. The current price of 70.69 is situated just below the middle band, suggesting that while the stock is still within the Bollinger Bands, it is trending towards the lower end. The width of the Bollinger Bands indicates the volatility of the stock. A narrow band would suggest low volatility and a potential squeeze, where prices may break out either upward or downward. Conversely, a wider band indicates higher volatility. At present, the bands reflect normal volatility, but the stock's positioning could indicate a consolidation phase, which may lead to a breakout if the stock can gain momentum. Examining the volume patterns, we see a current volume of 4,532,067, which is significantly above the average volume of 1,943,403. This indicates strong market participation and interest in CSCO stock. The volume ratio of 2.33 times the average suggests that traders are actively engaging with the stock, which can be a precursor to significant price movements. However, the daily change of 0.11 or 0.16% alongside the high volume indicates that sellers may be more aggressive at this moment, and this selling pressure could be influencing the overall price action. Support and resistance levels are also critical in the analysis of CSCO's price action. The identified support level is at 67.16, while resistance is situated at 74.22. The support level is a crucial point where buying interest may emerge, preventing further declines. If the price were to drop towards this support, it could be seen as a buying opportunity by some traders. Conversely, the resistance level at 74.22 represents a point where selling interest may increase, potentially capping any upward momentum. A breakout above this level could signal a shift in momentum, while a breakdown below the support level could reinforce bearish sentiment. Considering the potential market scenarios, a bullish scenario could emerge if the stock manages to regain momentum and convincingly break above the resistance level at 74.22 hours. This would likely require a combination of positive market sentiment, supportive volume, and a shift in the technical indicators, such as a crossover in the MACD. In such a case, traders may look for targets around the upper Bollinger Band or prior highs for potential profit-taking. On the other hand, a bearish scenario appears more pressing given the current indicators. If the stock approaches the support level at $67.16 and fails to hold, it could trigger further selling pressure, leading to additional losses. In this situation, risk management strategies would be critical for traders holding positions in CSCO, as a breakdown could lead to a more significant decline. Utilizing stop-loss orders or reducing exposure could be prudent measures to mitigate risk. In summary, while CSCO is currently positioned within a neutral RSI range, the overall trend appears bearish, as indicated by the moving averages, MACD, and price action relative to Bollinger Bands. The volume suggests active participation, but the implications lean more towards selling pressure at this juncture. Traders should remain vigilant, monitoring key support and resistance levels, and be prepared to adjust their strategies accordingly as the stock navigates these technical landscapes. The balance of risk and reward will be pivotal in deciding the next steps in trading CSCO. This analysis is for informational purposes only and does not constitute investment advice. For more content, please like and subscribe to our channel.